On today's show, we're talking to Richard Earl, an independent financial advisor, to discuss managing and establishing taxes in the UK. So Richard, what taxes would people expect to pay in the UK?
There's hundreds of taxes that you could pay in the UK, but most of them are really obscure. The main sort of personal taxes that you'll come across would be income tax and national insurance contributions. You pay those on the money that you earn through your work. There's also capital gains tax. That's just a tax that's paid when you buy something and then sell it on for a profit at a future date. The other tax that people really hear of is something called VAT, or value-added tax, but that's just added on to the price of the goods that you buy, so really it's unavoidable anyway.
Great, thank you for clearing that all up. It does get quite confusing. What is a tax code and why is it important?
A tax code is literally a letter that you'll receive from HMRC, Her Majesty's Revenue and Customs, and it pretty much tells your employer or your pension provider how much tax they should deduct from your earnings. So it's obviously really important that you get it right. If the tax code's wrong, or if there's not one available, then you'll be put on something called emergency tax or basic rate tax, and you'll pay 20% tax on every penny that you earn, which is obviously not right.
How much will people be looking to pay in tax?
Tax in the UK is normally banded, and on income tax, for example, you pay 20% tax on any income over the £11,500 personal allowance, and then if you earn over more than £45,000, you'll pay 40% tax on income above that level. Those are this year's figures, 2017-2018, and they get reviewed every year in the budget and obviously can be altered. You'll also be liable to pay national insurance contributions on any income between £8,164 and £45,000 a year.
What if I was unemployed? Would I be expected to pay tax and national insurance?
There really shouldn't be any need to pay it because lots of the state benefits that you might claim in that situation are not taxable anyway. And if you were in receipt of some that were, it's very unlikely that they would equate to more than £11,500 a year, which is obviously, as we said, the amount that you can earn before you pay tax.
If somebody's self-employed, what taxes would they expect to pay?
Yeah, I mean, for a self-employed person or sole trader, you pay exactly the same taxes as if you were employed. You just let HMRC know that you're going down that route of being self-employed. And then at the end of your tax year, you fill in a self-assessment form. This self-assessment form is just a document to HMRC telling them exactly what you earned through your business, what your expenses were, and then it calculates what tax and national insurance you need to pay.
So if I was to choose to leave the UK, what should I be communicating to the taxman? I
mean, as with all the other things that you'd have to do when you leave the UK, you just need to let HMRC know so that you can stop paying tax in the UK. You fill in a form called a P85, and your employer will give you a form called a P45. You put those two together, give them to HMRC, and they'll work out whether you've overpaid or underpaid tax while you were in the UK. If you've underpaid, then you might get a nice rebate.
That's great. Thank you so much for your answers, Richard. If people want some more information on the things we discussed today, where's the best place that they can find it?
Well, definitely the best website for all this sort of information and loads of other information about living in the UK is www.direct.gov.uk. There's heaps and heaps of information on there on all sorts of different subjects and certainly all the things we've talked about today.
Brilliant. Thanks, Richard. Really useful information.
It's my pleasure.
Brilliant.